Hello, everyone. Lovely Giraffe here. I wanted to go ahead and go over some of my continuing research as I kind of come to a finish on it. There's still quite a bit to go, but I think I've laid out a very strong case for most of the major, if not all, of the kind of major mining companies that I've looked at. So let's just jump right into it and go from there. So right off the bat, I just want a quick rehash that I ruled out 4 stocks, 3 being essentially just streamers or royalty, not actually mining, so they don't have that full upside. Um, I want full gains in this sector. And then the other one was based entirely in China, which has a history of lying on financials, even though it's based in Canada. There's, for instance, some American or some companies listed on the New York Stock Exchange recently that are based in China. There's been a lot of proof that those companies can fraudulently lie. There's essentially communist bureaucrats in those companies. So there's a lot of reasons to not be involved in that. Okay, so I ruled that one off right off the bat as well. So that's 4 out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 stocks eliminated. Okay, so that leaves 10. And then I was pretty iffy on about 3 of them. I didn't really like Aya either, or Koyer. I'm not sure if I'm saying that right. So that kind of leaves 5-ish. Okay. But I'm really trying to finish everything up again so I can really kind of lay out the case by case scenario. Okay. I want to touch base real quick on the junior miners. The Wall Street Silver subreddit really was trying to hype these up. I didn't see a lot of DD behind it. There would be like maybe an article link at most, or link to their website where the website was like, oh, we're going to be the best. And it just seems really overhyped. I kind of did a cursory glance in 1 or 2 of these and wasn't entirely impressed. Just kind of as a very clear example, Cuya Silver is a junior miner. They have 1 main mine and they're opening a second one. The main mine is in Peru, where the president-elect, who's coming in office soon, promised very high taxes on Peru's very important mining sector, which would probably include this company, right? And in that case, if they had 1 mine and the taxes went way up, that's not a good investment, period. And that's kind of what I saw with a lot of these, is they were much more risk than one of these that's good for not a lot more payoff at best, right? So that risk is just absurdly higher. It's not worth it, right? It's a super gamble. That's not even the right word, right? Like that, they're a super, it's a sequel, I guess is the way to look at it. So I was like, yeah, I'm not interested in them. They seem scammy. They seem pumpy and dumpy, right? People were trying to hype them up. They would probably sell, move somewhere else. Okay. So not interested in those. And then I wanted to go ahead and go over SLIV again, because I think it's been quite a while since I talked about why I like this company. I haven't finished relaying out all their forms to the extent I did some of these other companies, but even what I did lay out, I think has a lot of very transparent, good numbers and metrics that I think make this company look great, right? And I'll say right off the bat, they're not necessarily first in every category, but they're great across a lot of categories that PhDs and other like mining investors typically look at. Okay, so we'll jump into that. And so they kind of get that best overall award, if I could give that. And I think that will translate to huge gains for this company. Okay, so right off the bat, I really like the team. I think they have a lot of experience. They've worked with typically a bunch of mines. In particular, I like the CEO and I like the president. Okay, overall, very awesome. Okay, so let's go over this. They have an experienced team. I already checked that. They have a strong balance sheet. Once again, I did put this in green. Let's kind of put this back in. I think I had it on red on others. I'd put it more orange now because it's not like, it's not a make or break it. But we have to keep in mind that like as inflation goes up, the cash holdings, a lot of these companies essentially becomes less valuable. They can buy less equipment or buy less what have you to expand. Okay, so they have to rely on essentially their current situation. Something Chris Ritchie talked about in one of the videos on the media tab of the website, I think it's the first or second video, is he talked about how they locked in contracts with a lot of their like equipment companies they work with, so that the amount they pay is locked in, or it's already like fully paid for and it will be delivered at some date. Okay, so in that context, it's okay that they have quite a bit of cash holdings that inflation could chip away at, because they're set for most scenarios, right? They're a very defensive play that's doing very well. Okay, and that's why I like them. Moving on, they're very open about the feasibility studies. I'll get more into this down here, but they typically cost less for the feasibility studies. They get them done quicker, and they're very transparent about it as well. So they do give us the IRR, which is a good metric. They give us the payback period as well. Didn't necessarily see that for every other company. A couple did. So those are very good things. It's very transparent to have. And then they're focusing on cash flow on the horizon, right? So they're really focusing on having free cash flow, which once again, I said that's a very important metric to me personally in these companies, much more so than any of the growth metrics such as price to book, price to sales, or whatever, which don't reflect in this sector, in my opinion, any sector, but don't reflect the value that these companies create, okay? So that's awesome. Let's see. They have a big drill budget. We'll talk about that because I think they talk about that they're mining more than they have in like previous years. There's another graph for that. They have regional growth in their new mine, Pichacho. That's awesome. What I'll also say right off the bat that I'll probably reiterate later in this video is that their mines are also very close to each other. Let's get to that right now. So 85 kilometers trucking distance to Las Chispas. And what's good about that is that's a very valid, good, potentially super positive, but at the very least positive factor playing in their favor. I've talked a little bit about how some other miners had mines in multiple countries around the world. And so there's no economies of scale there. They would have more or less a corporate office for either that continent, that country, or what have you. So there's overhead there. And then they would need another mill. They would need more mining equipment, et cetera, et cetera. There's not that synergy, right? Because they have these mines very close together, they do actually get potentially some economies of scale. They could have one plant for those mines and then truck it from, say, Pichacho to Las Chispas to mill, right? I think I said they could have a mine and a mill. So they could take ore from El Pichacho and take it to the mill at Las Chispas. So they don't need a second mill. That's a pretty big deal. So let's look up how many miles that is, because I don't know how far. It's 52 miles, right? So that's not bad at all. It's definitely truckable. And I don't think I've seen that for too many other miners, if any. Okay. Now they're starting to mine. I think this is a little dated. Their silver grade wasn't huge for at least the initial mining. However, if it's anything to go by Las Chispas, which is doing super well, and this is very close, you're going to see that silver grades per ton go very, very high, which is amazing. Okay. And I'll also say they had 100% ownership in both the mines. And from what I could tell, they didn't have an NSR, a streaming contract, or a royalty contract with one of those silver streaming companies. Okay. They did for Cinco de Mayo. I'm trying to blank because that mine's not being mined as far as I could tell. What was it? Cruz de Mayo. My bad. What was it? Cinco de Mayo. Cruz de Mayo. So they did have one for that, but that's not an important mine. Okay. So let's jump back to where we were. I'll say this as well is their management bought quite a bit of shares. That makes me happy to believe in the company. Their cash is doing all right. Once again, I don't know why I put this green because it's good that they have a lot of cash, but inflation is going to chip away at that. So we'll see how that goes. Then I like their corporate structure in terms of who holds the shares. Institutional is very high, so people believe in this. Retail's low. I think this is a great opportunity for retail. That's not insignificant by any means, though. And then the inside officers and directors, i.e., these and the board members, own 7.6%. That's not bad. And then you have your commodity indexes owning a little bit. Okay. So I do think there's a lot of potential in that for retail, especially since institutional holds quite a bit and the officers and directors hold quite a bit. Okay. And then let's see, drilling leverage. I think I skipped over a couple of these, so let's come back to this. So they have the exploration upside. They say only 15 of the 45 veins included in the feasibility study reserve estimate. It's since then gone up per their news, if you follow their news, because I think this might have been a 2020 presentation. Could be wrong on that, but they've definitely included more veins. So, a little less green than it would have been a year ago, but very much still a very positive thing. They're playing it very conservatively in that regard. So you'll typically see them upgrade or expand their reserves and resources. So the inferred, the probable, the measured, the indicated, proven and probable. And we care about proven and probable typically. Okay. So that's all well and good. And then they have drilling leverage. Their finding cost of 0.85 per reserve ounce of silver equivalent. I don't think a lot of other companies per se gave this very transparently, but essentially what they're saying here is their cost to explore is very, very low. So that means that they're looking for the silver and they're not necessarily finding any. They're spending that kind of exploration cost, okay? All right, and then here's another thing that I really like about them is their feasibility study, okay? Turnaround time. So just to kind of reiterate, I'm not sure if I said this before, but a feasibility study is essentially when we're trying to set up a new mine, we want to see if it is worthwhile, if it has a lot of silver or gold, and whether it's economically viable, okay? So not only do they spend less time on feasibility studies, but I believe Chris Ritchie said in one of the videos that they spend less money on as well, okay? So that's awesome. And what that means is if silver starts going up over the next couple of years, let's say, they can take some of that money that they make and find another mine, potentially in the same area, and still have that same mill going. Could be in a different area, but at the very least, that points to a lot of upside over the long run, okay? Now inflation's taking off, so we'll definitely see a lot of upside in the short run as well. All right, and then in terms of their reserves, proven probable, remember the two we're most concerned with over measured, indicated, and inferred. They give us the that's the silver equivalent. I prefer the silver grade because I do know they get some gold. But once again, that's hot. That is so much higher than say who are one of these other companies where I was like, see, now this is SilverCrest whole company. So let's find, right? So I'm assuming this is the whole company. I might be, yeah, this looks like overall data, right? The average silver grade per ton is in 2021, it's 179 for Endeavor, right? And compare that to SLV. Now that is the, wait, hold on, I want to spread that info. That was the average silver grade. Do you have your average silver equivalents? You have your silver equivalent ounces produced. Let's see. See if I can find somewhere else. Let's see. You don't have your silver equivalents here. Because gold will definitely raise that quite a bit. Let's find it back. That might be the number I'm looking for right there. Let's come back real quick. Where was I? Improvable, they have 1,000 plus proven, excuse me, 1,000 plus silver equivalent, right? So what was I? Shoot, I think I was in that. So let's take let's indicate it. Where's your proven? It's the issue with having so much data is it's very hard to then kind of come back and find it. Give me 1 second. So here's your indicated and inferred. Where are you? So where's your proven? Proven probable. I know I found you for most companies. Come on. Hold on. I'll be right back. I'm gonna use the restroom real quick. All right, so I'm back. Let's go ahead and jump right back into it. I was trying to find a silver equivalent for the proven and probable of another company. The thing is I've typically put it in one of two places in my research. I really need to organize this stuff. I have a certain area for stuff. I don't have it like lined up across tabs. Let's see. Where are you? Where are you? Where are you? Where are you? No. Let's see. I know some of them I have very clearly displayed. So I might have to do more digging. Give me 1 second. We'll find it one way or another. So I need to fill out the news for y'all. Proven and probable. So you have 1,000,000 ounces. You don't have like a silver equivalent, do you? Revenue. One second. Let's keep digging, shall we? Let's move these up a little bit. Just clean up as we go. Probable proven. Do we have a silver equivalent? No, we don't. All right, well, let's move on from that. I definitely will try and address that. Either way, that's generally a very high grade per ton. So that's awesome. They have a very high million of ounces of silver equivalent as well. Okay, so high grade and quite a bit, right? So not the largest mine, but definitely high grade, which means lower cost, okay? So, right, so one of the highest grade primary silver projects in the world, right? Bada bing, very true. They have a low exploration cost, and they have generally a low sustaining capital cost, okay? There's less than 5 years to reach the reserve. 50% of total drilling completed in 2019, 2020. So there's what, 30% left, and then they have this other mine that's getting ramped up as well. Okay, so there's only 15 to 45 veins included in the reserve estimate. Once again, I said that this is a little dated. I believe it's from 2020, so that's gone up quite a bit. But not all the veins are included. They've been very conservative about that. Okay, so I'm definitely a fan. And I think it still crapped out on me at some point, so I lost a lot of my lines. But we have our average annual production of 12.4 million ounces of silver equivalent. That's pretty good. They have their throughput. Their mine life is very like genuine. Once again, I saw Fresnillo and Mag Silver with that 19-year mine life. Now it is the biggest mine, but generally something that big, hard to gauge how that's going to play out, right? So that's very, very believable and very open as well, okay? So we have our operating costs, and then we have our all-in sustaining costs. Now look at this, right? That's fantastic. Compare that to some of the other companies that had essentially like $20 per ounce, right? And people like those companies already. It's like, these people are spending way less to get that silver. Okay. So that's awesome. Operating costs, What's the difference here? Per silver equivalent. Okay, fair enough. I also like that they give us that as well. All right, so here we go. Let's get in this sort of thing. Okay, so in their mine, Las Chipas, they're starting to get into the deep zone. So we'll probably see costs go up. There might be a higher grade, might be a little lower. So there will be higher costs, but they are starting to ramp up that other mine, and things I think look pretty well in El Muerto as well. Okay, so that's all well and good. And then there's their after-tax cash flow, which I like seeing that. We can see, right, this follows that net present value sort of concept of the mine. It was negative as they were, well, it's probably negative because of COVID. And then it's going up and it's staying relatively positive until the end of the mine in 2030. Okay, so I'm very happy with that. Okay, management and board own 7.6% of the company. That's pretty good. I wish it was more. That's kind of why that's orange, but they at least have a stake in the company, okay? So it's a unique asset. It's one of the only top 10 global silver primary mine held by a single asset producer. And there was no NSR or stream that I could find. So they're not paying out 2.5% to, say, Sandstorm Gold, like per month, per year, whatever. So that means more cheddar for people willing to invest in this, such as myself, right? That's not like a huge positive, but that's definitely a good positive. Okay, so it ranks well on mine life. The 8.5-year mine life positions in the top 4 silver primary assets globally. So yeah, and once again, I believe their honesty. Some other companies seem to overhype things a little bit. They could have easily been like, oh, it's 12 years, and that would have put them higher. That sounds pretty reasonable to me, and it's high grade, low cost. And they have another one. Okay, and then yeah, so they also have this nice little graph here. That's the value of shares purchased annual base salary. We can see the CEO has 120 times his value in shares to his annual salary. So he's heavily invested in this company doing well, right? So if it doesn't do well, he's losing a lot of money. So that's good. Chris Ritchie as well, the president, 26 times. The VP, 21 times. Okay, so I think that bodes pretty well in terms of their confidence. You can see that in videos where they're talking. They seem very calm, collected, and cool and confident. Okay. So let's jump back over here. I don't think this was a graph I typically was concerned with. It does talk about the silver grade and silver production from 2019. So here's Las Chispas. So once again, you can see, actually, let me make sure. I don't like graphs like that too much. Give me a second to interpret this so I don't say the wrong thing. So we have the silver grade, right? So it's one of the highest silver grades, right? There's only, what is that? Greens Creek by Helka that's higher. So it's one of the highest grades. Silver is the amount of silver produced. So we can still see that Helka's a little better in that regard. And I have Helka in green, sort of for that reason. And then what's our, I think that's about it. I don't know what the blue line is for. Maybe that's an average. I mean, they're definitely above the average here. Okay, so moving on, I was pretty happy with this stuff, which is why this gets a lot of green lines. So it was their 2020 forecasted, and it's more or less stayed the same. A lot of companies have improved. They've improved a little bit as well, all in sustaining costs. Once again, this is one of the most important metrics to me that I'm looking for. I think a lot of people overlook. They're concerned with total silver versus how much it costs to mine that silver. Okay, especially since there's a lot of factors that can affect this industry negatively, and then it comes down to who is the best position to take advantage of the bull run. Okay, so if we look at SilverCrest, they are possibly, in this case, it looks like they're the lowest all-in sustaining cost per silver equivalent. Okay, some others come pretty close. Let's look at these other ones. So gold, not too worried about. Mag Silver. Okay, Gato Silver. I hope I'm saying that right. Fresh Neo. Now here's the thing: is we can see if I move my line, where are you? First Majestic. Helka's quite a bit higher. right? So yeah, Helka had, um, wait, which one's Helka? I hate it when people put names sideways. That's turn my head. Yeah, so Helka was this one. So Helka had a higher grade silver and more silver, but look at their all-in sustaining cost. It's almost 3 times, definitely double. Okay. Now that being said, these had sources, so this isn't necessarily SilverCrest just saying this themselves. Okay, this was like outside investors, big banks, kind of investigating that sort of thing. So, right, that's kind of my argument, even just based on their presentation and some of their news. And I really want to finish their geology. I have some of their drill holes, so I do want to finish my research on them. But we can already see, right, that they're very high in each class, and so they're best overall, right? There's Las Chispas, right, which is relatively high and it's silver grade, and it's production, right? It's not the lowest in that regard. I can't say that's necessarily top of class, but their silver grade is very, very high, definitely top of class, almost first. And then their all-in sustaining cost is first, right? So check, check. That paints a very good picture of this company that I'm very happy with. Okay. And then we have their 2023 free cash flow yield, which is 12%. Not necessarily the highest, but definitely in the upper half. Okay, so that's fantastic. Then we have their drilling meters by year. And this was another thing that I think bodes well for them. In 2021, they mined, or they explored, excuse me, or they drilled, excuse me again, I'm a little tired, I'm still waking up. In 2021, they drilled more than they did like in any previous year. And remember, their exploration costs were some of the lowest. They were less than $1. So that means that they really can start ramping up silver production to meet the bull run, right? So very happy with that. I think I already covered this. More veins have since been included. I've talked about that. That's not the most up to date. Okay, and then we can see kind of progress, and this shows how much they've drilled. In that, here's where they started in 2016, and then here's where they are 4 years later. And what was nice as well when I was looking through their news and some of the tables, and I'll try and highlight with some other pictures, is they have a lot of kind of run across. So they'll go down these veins, find a lot of very high grade silver, and then be able to come back and like go down another vein, right? Which saves costs, raises revenue and whatnot. Some of the other miners, I didn't necessarily see that as much. Okay. Talked about how Las Chispas is mining. El Pichacho high grade on the surface. Okay, right. That's awesome. I'm definitely watching the news on El Pichacho. See how that turns out. I think I've covered mostly everything I have so far. I need to finish getting the documents. I was pouring through all of the news articles for quite a while, and it was just drill hole after drill hole. So I do need to get their financial forms. And then we have their mineral estimates. So let's see, we have their contained metal, quite a bit of silver. We have their grade is relatively high across the board. Okay, fantastic. And their silver equivalents, not too bad at all. I mean, it's pretty high. All right, so just kind of recapping, all-in sustaining cost was very good. They're very transparent with some of their numbers that we like to see. They were typically better than some of the other miners. I've shown them in other videos. I'm not sure I've done like a cross comparison, which I'm trying to work up to as quickly as I can. There's the silver equivalent grade. And then I forgot to mention this. We have the silver recovery rate. Okay, so that's another factor that I focus on for a lot of companies. I saw mines that started out at like 40% and it went up to like a max of 80. They, I think, started out above 90. They've gotten quite a bit better. That's a very good recovery rate. Okay, so very happy with that number as well. And then I think I included like some drill holes. I think I repeated some of my pictures. Yeah, took more notes. Okay, so Bobby Sur, we can see that they have essentially just their drill holes, right? So it's from this position to this position, the length, the estimated true width, and then how much gold there was per ton and how much silver there was. Okay. And we can see that there's quite a bit of variability. Okay. But it seems like every so often it goes quite high. Okay. And I think they have one as high as like 16,000 plus. It's very small. But that was very high. And in a lot of their news articles, if you look through it, which I'll try to, if you follow one of the mines, you'll see consistently month after month, it's, oh, we found another vein that broke our previous silver equivalent record. We found another vein that broke a silver equivalent record. Okay, so I'm very happy with that as well. Now, and I'll try and post a video kind of going through that news as well, because I thought that was pretty cool. All right, so what do we have over here? It looks like I repeated a lot of my work. Yeah, so those are just some nice basic facts that I look for. Not sure how stuff got duplicated. Probably was moving stuff around. Excel absolutely hates me. All right. Yeah, so I think that covers kind of a lot of the basics. I'm obviously going to dive more deeply to redo a lot of my work that I did for these other companies, especially regarding kind of the news and the drill holes of, oh, we found made a new record or this, that, right? But once again, it's not that they're necessarily the best in every category, although some they are. It's that they're almost always consistently the highest of all the categories that a lot of researchers and institutional investors look at, that makes them look wonderful overall. And they have a fantastic plan by management to keep building on that. And then something that's not probably fully accounted for on their accounting books, but they've talked about, is they have actual synergies of their mine. Their mines are close enough that they only, if they don't need a second one, only need one mill. And they could like build that up. So that gives them a lot of flexibility. I've really said how they're like aggressively defensive, if that's a thing. So they're positioning themselves right now to play defensively. But once the silver bull run starts, which I think is very soon, you're going to really see them be able to maybe corner the market, right? I hope. I certainly hope. So that's just kind of a brief tour of this company. This is my favorite one. This is the one I'm fully invested in. I'm definitely going to try and really finish this stuff up because I'm really trying to hammer through it. It's a little tiring, granted, but a lot of it is just kind of comparing these metrics across companies. Okay. And once again, I think SilverCrest really is the one. Okay. So thank you very much. I hope you enjoyed this video. Once again, I hope you learned something about the mining sector, about the commodity sector, about finances, about investing. That's the first main thing of this channel. First objective is just to learn and hopefully have fun. Hopefully this stuff isn't boring. It's a lot of numbers. It's very data driven, I guess. Secondly, I'm fully invested in this company, so I like talking about this stuff and kind of sharing investment tips. Once again, I see a lot of people throwing out suggestions for miners that I don't agree with based on some of the commonly agreed upon metrics and some of what I see when I dig deeper and I'm like, this just kind of looks a little off to me, okay? So thank you very much for watching this video. If you like it, maybe share it with friends and family. I'm going to go to sleep. Have a very good day, okay? What is it, Sunday? Sunday. God bless. Have a good, happy Sunday. Lord's Day. Bye-bye.